In this scenario, although the company specifies what work Stephanie will do, Stephanie has the freedom to determine when, where, and how she will complete her tasks. These are classic hallmarks of independent contractor status. This table summarizes these two scenarios, highlighting the key factors that determine Stephanie's status as an employee or contractor. Feel free to pause the video here to review it. Now, if every situation were as clear-cut as those two examples, no one would break a sweat over the proper classification of workers. The problem is that many present-day work arrangements between hirers and workers fall in the vast gray area between the extremes. For example, some employees have considerable freedom to set their own hours, while some independent contractors must work on site for extended periods of time. To help both hirers and workers resolve these dilemmas, the IRS has developed a series of tests to distinguish employees from contractors. Here is a rundown of the main tests. The so-called behavioral control test looks at the extent to which the hirer decides not only what tasks a worker will complete, but how the tasks will be done, including what the worker must do on a day-by-day basis. The questions that the IRS asks as part of this test include: does the hirer train the worker, or does the worker already possess the needed skills? Does the hirer specify when and where the work must be completed, where to purchase needed supplies, and/or which tools, methods, and equipment must be used? Does the hirer decide who else will participate in the work, or is the worker free to hire others to assist with projects? And if multiple workers are involved, does the hirer specify which person must perform each task? Does the hirer dictate the sequence in which tasks must be completed, even if doing things in a different order would yield the same result? And is the worker subject to performance evaluations or reviews? For each of these questions, the more control the hirer exerts, the more likely it is that the IRS will view the worker as an employee. The financial test looks at both how the worker gets paid and how job-related expenses get handled. Generally, employees are guaranteed a certain amount of income on an hourly, weekly, monthly, or annual basis. This pattern holds even in many cases where the employee's earnings depend heavily on sales commissions. By contrast, independent contractors often receive a flat fee per project. This distinction between time-based earnings and flat-rate project fees seems pretty clear at first. However, it does not always apply neatly, since many contractors base their fees on hourly rates. So while fixed project fees may be a strong indicator of independent contractor status, an hourly, weekly, or monthly pay rate does not necessarily mean that a worker is an employee. Looking at how project expenses get paid might shed more light on the matter. Many employees get reimbursed for most or all of the expenses they incur in the course of completing their work. By contrast, independent contractors must often pay a variety of operating expenses, like the cost of supplies or rent for a workspace, out of their own pockets. Depending on their field, contractors may also have significant capital expenses, which are major investments in long-term assets like equipment, office furniture, or real estate. As a result of paying these expenses, an independent contractor often faces the possibility of either turning a profit or taking a financial loss on each project. This profit or loss question carries special weight with the IRS, since employees typically do not have to worry about incurring a loss by doing their jobs.